Hello, everyone. Gives me great pleasure today to introduce the MD of Alma Metals, Frazer Tabeart, for our webinar. He runs Alma Metals, which is a exploration and development company focused on the large-scale Briggs copper deposit in central Queensland. They're currently doing a preliminary feasibility study to evaluate the mine for under, I guess, financial conditions to move forward. There is a major drilling program underway, and this will continue for about 12 to 15 months. On top of that, also there is a project in the East Kimberleys that Alma is also has an interest in, but currently the main focus is on the Briggs copper project. So with that, I will hand over to Frazer to give his presentation.
Thanks, Anthony. Thanks for the introduction, and thanks everybody for joining this webinar. I'm about to share my screen, so hopefully that works for everybody. Let's talk about copper. Let's talk about Queensland. So, Alma is one of the few pure play copper companies listed on the ASX, particularly in terms of those that have assets with potential for long life and large scale in a tier one jurisdiction, which is what we believe we have with the Briggs joint venture and its location in Queensland. So as I mentioned, it is a joint venture. Alma currently has a 51% JV interest in the project. We can earn up to 70% through further expenditure commitments. We've got a number of years in which to meet that. And once we get to a 70% interest, it then becomes a contributing joint venture with our partner Canterbury Resources. So, it's a fairly standard earning joint venture. Briggs itself is in the sort of the I guess on the coast of. I'm just pulling up a laser pointer here. So here's the project. We're only 60 kilometres from the port of Gladstone, so there's very good infrastructure in place. It's part of the sort of the northern New England origin, which is sort of emerging from a copper perspective, and we'll talk a little bit about the geology of that through the presentation. At the moment, with the published resources at Briggs, it is the largest undeveloped copper project in Queensland, with over 2 million tonnes of contained copper metal. And as you'll see from some of the images, there is still upside in terms of tonnage on that project, both to the west and at depth within the project. We've got an experienced board, which I'll introduce in one of the slides. And as Anthony said, we are sort of now well into a pre-feasibility study, particularly the drilling and metallurgical components of that. So, a lot of information to look forward to over the next 12 to 18 months. If there are four key points I want to get across today, the first is about the scale of the resource. There are currently over 930 million tonnes in JORC resources in the inferred and indicated categories. As I said, the deposit is open, so we think it will grow. And it is certainly Queensland's biggest undeveloped project, and certainly one of the largest undeveloped copper projects in Australia. The near-term catalysts are drilling largely. So we've still got about 40 infill drill holes as part of our conversion of inferred to indicated resources. That program started about 3 months ago. Will continue for the next 12 months or so. There will be 4 exploration holes in addition to the infill holes. Those are targeting the extensions to the west of the known resource. And that will all feed into and support the engineering studies in the pre-feasibility study and provide sample for metallurgical test work. We're in a good location, very simple land tenure with no material impediments, a good regulatory environment in Queensland with a clear and well understood permitting pathway, and some good examples there such as Harmony Gold's commitment to the sort of $1.7, $1.8 billion EVA copper project in northwest Queensland. So there's plenty of other companies that are prepared to invest significantly in this area. And another key advantage for us is infrastructure. As I mentioned before, we're only 60 kilometres west of the port of Gladstone, and running very close to the project are all the main sort of infrastructure elements you would need to develop a large project, including railway, gas pipelines, high voltage power, water pipelines, and a lot of skilled and semi-skilled workforce and established supply chains within the region. Just a little bit about the company. Our chairman, Alistair, and I are both geologists, quite extensive experience prior to joining the junior sector with major companies, either BHP or Western Mining in my case. And Alistair is currently also an executive director and one of the largest shareholders of Caravel Minerals. And they are very close to finishing a definitive feasibility study on a similar tonnage grade copper project in Western Australia. That has a market cap at the moment of about $160 to $170 million, and sort of shows, what Alma is aspiring to get to by completing a pre-feasibility study, going into a definitive feasibility study. If you look at our metrics, we've currently got an enterprise value of about $25 million, so a long way short of that sort of 150 to 175 million that we think this project can get to once we can, remove any vestiges of doubt on the resource quality or the metallurgy. In terms of the rest of our board, John Dean's an important guy in terms of his skill set. He is currently a non-executive director on our board. He's also a senior executive with First Quantum Minerals. His roles include sort of commercial management at the giant Cobre Panama porphyry copper deposit, and also study manager for one of First Quantum's emerging projects in Argentina. So he's got a lot of skill to bring to us in terms of project studies and then getting projects up and running. He's done that in both Africa and in the Americas. And then Valentine, who's also on our board, based in Zambia. He's got a lot of experience with copper and was involved in the privatisation of the Zambian copper belt a number of years ago. So quite an experienced board there in terms of copper, in terms of project development and project execution. Why are we doing it in copper? So people ask us this all the time. I think the message is well and truly out there now that copper is a really important metal for the developing world. If we want to decarbonise, if we're supporting AI rollout, AI data centres, upgrades to the grid for renewable energy, copper is clearly one of the key enabling metals to allow that to happen. The problem is, at the moment, there are a number of glitches on the supply side. And that's actually pushed the price of copper well beyond the predicted price forecast based on the increase in demand, because the supply side issues have actually put the copper market pretty much into a deficit now, a couple of years ahead of when that was predicted to be. If you look at the actual copper price at the moment, it's more than $1 ahead of where most predictions are. So we're currently seeing copper at almost an all-time high of $6.50 a pound. We don't really see much chance for that to come significantly below that in the foreseeable future, given demand is still there, and a number of the world's largest copper mines are all having significant supply disruptions, which you see on this graph here. So there are three major mines in the world that are all have problems, largely to do with seismic activities around there, flooding or rockfalls. Those events all happened in the past, but have not yet been able to get any of those mines back up to anywhere near full production. So that's taken a significant amount of copper out of the market and is leading to this short-term price hike. And as I said, we don't really see a great opportunity for that to significantly diminish in the coming years. So that means it's a great time to be developing a large-scale copper project in a low-risk jurisdiction, and that's exactly what Briggs is. It is large. We're in Queensland. We're in a mineral province which is reasonably well understood, probably more so for gold than for copper, but certainly there are a number of copper projects within this geological province known as the New England Origin, and there's more and more exploration work that's happening there. Now, Briggs itself, as we mentioned, is very large. It's right at surface, so we get the opportunity for very low cost mining, and we do have significant metal byproduct credits from molybdenum, silver and gold, which are currently being evaluated through our metallurgy programs. We completed a positive scoping study late last year, and that warranted an immediate progression into pre-feasibility study, and that work commenced in May in terms of a major drilling program. The work to date has indicated that the copper is really easy to extract using conventional technology, so we don't have to bring in rocket science or any untested technologies to get very high recoveries on the copper in particular. And we are currently evaluating a separate molybdenum concentrator to unlock the true value in that particular byproduct. And as mentioned before, very good infrastructure, and that really helps, particularly in terms of upfront capital costs that will be required to build a project of this scale. And this next image really just sort of highlights that. You can see the Briggs project here sits about 10 to 15 kilometres due north of the main infrastructure corridor that links the coalfields of Queensland to the port of Gladstone. You can see Gladstone here. There are 2 coal export terminals. There are 3 LNG terminals converting gas into LNG and then exporting that. And as a result of the availability of coal and therefore low cost electricity, you've got 2 alumina refineries and 1 aluminium smelter. So this is one of Australia's great industrial hubs. We're only 60 kilometres away from that as the crow flies, and all of the enabling infrastructure that we would require for a major project is already in place. That is likely to save hundreds of millions of dollars in upfront infrastructure costs should a mine be economically viable at Briggs. In terms of economies of scale, we've mentioned this before, it is a very large deposit. It sits right at surface. So the valuation that we did in the scoping study looked at open pit mining with an ultimate pit that's some 2.2 kilometres long and about 1.3 kilometres wide and 600 or 700 metres deep. Very efficient mining because of that. Very low strip ratio because the metallurgy is also very good, and the combination of excellent metallurgy and low cost of mining means you can go to a very low copper cutoff grade, and that plus the proximity to surface and the geometry of the deposit gives you this very low strip ratio. And that is one of the reasons that we believe that low grade deposits can work in this area. If you've got good metallurgical recoveries, low mining costs, access to existing infrastructure, and a good copper price, those are the sort of the 4 key drivers of value in these low grade copper deposits. And one of the reasons that our share price is relatively low is there's generally a fairly poor understanding in Australia of developing these low grade copper deposits. There aren't many of them. Australia's been blessed with large high grade deposits such as Olympic Dam and perhaps Mount Isa. Well, those are fairly rare. There are a larger number of lower grade deposits, and those are the ones that are currently being evaluated. There's a number of mines operating in Canada, the USA, and down into South America at grades slightly higher than we have at Briggs, but not enormously high. And it shows that if you've got access to low cost of power and or good infrastructure, and particularly low strip ratio, then 0.2 to 0.25% copper is not a hurdle to economic return. The other thing that is really important for us is very straightforward processing technology. This is a very conventional flow sheet with primary crushing and then a SAG mill ball mill combination. The key for this is we are getting very high recoveries of copper, 94 to 95% recovery at very coarse preliminary or primary grind size. And that reduces the amount of power that is required to get the copper out of these rocks. And with power being one of the biggest input costs on the processing side, anything you can do to reduce that obviously has a positive impact on the bottom line. So that's very important. We get very quick reaction kinetics, so it happens quickly, and we've got low reagent consumption. So these all add up together to give us a very low cost of processing. We are looking at the addition of a molybdenum circuit. That will allow us to get full value for the contained molybdenum within the mineralisation. We've got active metallurgical test work programs underway using drill core from last year's drilling and the previous year, and there'll be additional metallurgical test work using the results from this year's drilling programs as well. So that work will be basically done to a pre-feasibility study standard over the next 12 months, and they'll feed into finalisation of the process flow sheet, and then obviously ultimately into the economic modelling of the project. So the key steps over the next 12 months to 18 months are completion of the preliminary feasibility study. We've got a major drilling program underway, as I mentioned. We are looking at basically attempting to put the vast majority of the existing inferred resource into the indicated category. We have 40 odd drill holes planned for this calendar year, another 40 odd drill holes planned for the first 6 months of 2027. We hope that will put of the order of 600 million tonnes into the indicated category, and that will be used to support the engineering studies in the pre-feas, looking at an aspirational mining rate of about 30 million tonnes a year. So we're aiming for a project here that's capable of mining at that rate for about a 20-year period, and looking to have a minimum of 600 million tonnes in the indicated category to support that. So that drill program is underway. We released the first results of that about 2 weeks ago. We expect to see assays flowing from that over the next 12 months, so there'll be regular updates on progress with the drilling. The areas we're really keen to get into are shown on this image, particularly on the western side here of the main part of the deposit. The coloured imagery in the background here is the copper distribution in soil sampling, given the proximity of the resource to surface. This is a very good proxy of grade. We're seeing there's quite a large area here of the current inferred resource that has a low density of drilling but very good geochemistry. So this is the area we're keen to get the drill rigs onto later this year. We're just waiting to get our cultural heritage clearance programs underway and completed there to allow us to get onto those pads. That will then form much of this year's drilling in here. So the yellow holes are the holes we plan to complete this year, and then the blue and the green ones are for next year. We're also keen to evaluate the potential expansion of the resource to the west. As I mentioned before, you can see there are satellite highs in the copper in soils both here, 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 and here. So we have 4 holes planned to do preliminary evaluations of those 4 geochemical targets. Obviously, any success with any of those drill holes will lead to further drilling planned around that. Those holes are all testing anomalies that are outside of the current mineral resource estimate, which is the dashed black outline, but they are potentially within what is currently the anticipated final pit. So any success with these, converting any of this material from waste into economically viable mineralisation, would help reduce the strip ratio of the overall deposit and would have a very positive impact on the project economics. So in addition to that work, as I mentioned before, we've got ongoing metallurgical test work. That's helping looking at the domaining. So we'll be looking at different rock types, different spatial distribution of samples to ensure we've got good coverage, both spatially and from a geological perspective. We are looking at, as mentioned before, molybdenum recovery circuit. We're also looking at the potential to even coarsen up the primary grind size so that we can reduce the power consumption. We expect all of that information to be complete around about June, July next year, feeding into then finalisation of the process design flow sheet, also then flowing into mine scheduling, mine design, and all of that being pulled together into a financial model towards the end of next calendar year, and the completion of the study, and hopefully publication before the end of 2027. So that really sort of sums up what we have here. It's a very large project, right at surface. It has the potential to grow both to the west and at depth. It has the potential for very simple, low cost, low strip ratio mining. You can see the photograph on the right here shows part of the mineralisation outcropping and being inspected by our geologist here, and also representatives of one of our largest investors here, the World Resources Fund. This particular outcrop, we put a drill hole underneath that last year. The mineralisation directly below this, we had 30 metres at 0.9% copper, part of a broader 386 metres at 0.26% copper. So certainly capable of delivering very long and modest to good grades of copper mineralisation right in the middle of the deposit. We have good leverage to existing infrastructure, and as a result of that combination of infrastructure, low strip ratio, excellent metallurgy, and large resource, we think this project has great merit, and that's why we're investing significantly, taking this through to a pre-feasibility study. So that's sort of the high level. I'll leave it there. Happy to pass the baton back to Anthony now and open this up for Q&A.
Great, thanks, Frazer. It looks like you've got a lot of busy work ahead of you for the next 12 to 18 months.
Yeah, it's going to be busy. We're sort of trying to make it as efficient as possible. We've just put in place a 16-person exploration camp. That's in the process of being commissioned now, and we're currently running one drill rig on double shift, and hope to double that to a second drill rig on two shifts once we've got the next batch of drill pads prepared and ready to go. So we should start to see an acceleration of the drilling performance, certainly kicking off hopefully within 1 to 2 months, and then for the rest of that program.
Great. Does sound very busy. Just a question on I guess the economics. Low grade resource, but very close to a lot of attractive infrastructure. If I'm looking at this relative to other copper, I guess current copper mines that are operating at a higher grade, do the economics work out, or do you anticipate the economics working out quite similarly to them, given all of the advantages you have? And I guess another question I'd have is it, if I'm looking at the current copper price and the long-term copper price, would it be fair to say that your assumed copper price is nowhere near what the current copper price is when you are looking at this project?
Let me answer that last question first. So when we did our scoping study last year, we used the spot price then of I think it was about $4.40 to $4.50 a pound, and the numbers showed a very robust project at that copper price. Our view at the time was that the copper price was likely to go above $5 a pound in 2026 and probably stay there materially for many, many years. We've seen that happen before Christmas into early January. Really since early January, the copper price has been generally between $6 and $6.50 a pound. So significantly higher than the numbers at which we thought the project was pretty robust. So that certainly had a big impact. I mean, going forward, everybody has their view on the future price of copper. Probably the only thing you say there is we're all wrong. But when we look at the demand for copper, that's not going away. Decarbonisation isn't going to stop. AI data centres are coming, and there are going to be more and more of them. So you can't see the demand for copper materially dropping. I think it's going to increase, maybe not as quickly as some people say, but it's there. But it's the supply side issues that are there. Large scale mines take longer and longer to permit. The existing large scale mines, three of the world's biggest and best copper mines have had engineering challenges in the last 3 years. And that's partly, driven the copper price up by, you could probably ascribe a dollar a pound of that increase to those three mines having had technical problems. And all three of them have basically kind of pushed out when they think they'll get back to full production. So there's still no clear idea. Going back to your previous question, there's always a lot of combinations of what makes projects economic. What we do know is, we're more or less at sea level, so we don't have some of the issues that you would have in the high Andes, where developing projects at 4,000 to 5,000 meters, your diesel efficiency is massively reduced. So we don't have those issues to deal with. We're not remote. We're very close to existing infrastructure, so we don't have to spend tens, hundreds, even billions of dollars in building that infrastructure because it already exists. And we don't have a huge pre-strip to get into the deposit. I mean, there's a thin veneer of oxide on the top, which you can see in the photograph there. You can see the green coloration here. So, in this particular part of the deposit, there's about a 10-metre veneer of oxide. Of our resource, I'd say 98% is sulfide, and it all responds extremely well to that processing. That means we have very low strip ratios. So yes, we're going to be mining at 0.2, 0.25% copper, but at a very, very low strip ratio. Compare that with mining potentially at 0.4% copper with a doubling or tripling of the strip ratio, and we're economically more viable than the guys at higher grade. So, grade is king is a complete furphy. It's only king if everything else is equal, and it invariably isn't. And it's all of those other issues that are important as to what makes for a project to have economic viability over a long period of time.
Yeah. So ultimately, you've got a lot of cushion as far as where the copper price is now, so that the project is not as leveraged to the copper price as one might imagine when just looking at some of the mine or the project particulars.
It's leveraged in as much as, if the copper price increases and all of your other costs stay fixed, then it's a great result. Yeah. But the higher the copper price goes, I guess the less leverage, because you've already maximised that. As I said before, in our scoping study, we thought the project was very robust at $4.40, $4.50 a pound copper. If you put in any numbers north of that, you get a very strong positive increase in the bottom line, which makes the project even more robust. And it could certainly survive, probably dipping down to $4 a pound, maybe even less, and still would be, operating very positively on a cash basis. That, obviously, as I said before, predicting the copper price is a bit of a mug's game, but you can just look at the long-term thematic, and because we're talking about project here with scale and multi-decade life, that's what you've got to look at, is look at the thematic, not the short-term fluctuation in copper price. You just got to make sure that your mining and your processing costs are low enough that you can weather the odd storm where the price dips below the long-term average.
Yeah. So assuming the PFS comes back looking very positive, what's the timeline to the DFS and BFS, and then moving on to actual production?
Yeah, that's the $64 million question, or probably a little bit more than $64 million. Look, the timeline is, we aim to complete the pre-feasibility study by the end of next year, so end of 2027. The DFS, which is another name for a BFS, we would expect that to take of the order of 12 to 18 months, because it's relatively simple project, it should be quite straightforward, taking it there. It's really just a question then of tightening up your tolerances on your engineering. You're
Yeah.
not changing what you're studying, you're just tightening up those tolerances. So we would think that would be about an 18-month exercise. Then obviously you've got some front-end engineering, design work, and you've got to go and raise the money. So I think all up, you're probably looking at 4 years from now before you're ready to commence construction, and then at least 12 months of construction before production. And that's sort of aligned with the permitting pathways as well. You're probably looking at a minimum 4-year permitting pathway from this point. So we are,
Mhm.
working with consultants on designing baseline
Yeah.
studies and hope to have those commencing within the next month or two. It's important to have those in place and build up that data set so that you can then submit your permits in a timely manner. It is a large project, and so a project of this scale, will take some time to permit. We're well aware of that, and it's certainly something that we're keen to make sure we don't drop behind the sort of critical path on.
Yeah. Yeah. So a question I've never really asked before, but when you look at critical minerals, especially like rare earths and the such, like everyone's looking for MOUs and LOIs. When it comes to a large-scale copper mine, do you need anything in the way of pre-commitments to actually bring something to the bank, or given the ubiquity and necessity of copper in everything we do, is that kind of a moot point?
Now, look, at the end of the day, if you're going to borrow money to build a mine, you're always going to need a contract to back that up so that the lender can be,
Mm.
happy that they're going to get paid out.
Yeah.
Yeah, I guess the difference between copper and some of the more boutique critical minerals is those boutique ones are not necessarily traded on an open exchange, unlike copper,
Mm. Mm.
and therefore you often will need very specific, not just an MOU, but an actual full scale agreement in place that stipulates
Yeah.
what the pricing mechanism is. Yeah, in terms of a large scale copper mine, you're going to put an offtake agreement in place covering the vast majority of your output, if not all of it, enough to
Mm.
satisfy the lenders that they're comfortable they're going to get payback,
Yeah.
without stressing the project. The beauty about copper is it's, one of the most heavily traded metals. It's open and it's transparent,
Yeah.
and it's not susceptible to massive shocks in the pricing cycle from unusual events
Yeah.
in a particular metal. So it's a lot more robust than many of those sort of more boutique metals. But you're still going to need a long-term contract to support any project finance.
Yeah. Yeah. Just can you give any quick updates on the East Kimberley copper project?
Yeah, so East Kimberley is an interesting project. It's very complementary to what we have at Briggs. So it's a different geological target. So
Hmm.
we're looking there for sediment-hosted copper, which generally tends to be significantly higher grade. So,
Mm.
perhaps, several orders of magnitude higher grade than we have at Briggs, sort of, 1.5 to 2.5% copper is reasonably common and sometimes higher. So from that point of view, it's very complementary. It's a much earlier stage project. So, the reason we looked at this was, government geologists in the 50s and 60s identified copper occurrences in the East Kimberley at two very specific stratigraphic levels within a thick sedimentary package. And that sort of fitted the model for sediment-hosted copper as we see in the Zambian and Congolese copper belts.
Mm.
Um, it is one of the reasons there's been very little work done on it in the last 50 years. It is on an Aboriginal reserve. So that makes access, it's challenging from a logistics point of view because there are very few roads there. And, you've got to negotiate access agreements and heritage protection agreements with the indigenous people there. So, we've been doing a lot of work on that. We've got a heritage protection agreement in place. We're currently in the process of renegotiating that to add 2 extra exploration licenses. And then we would like to get out there this dry season, before this dry season ends, and do an initial evaluation of the known copper occurrences just to confirm the correct process. And then we've got a major stream sediment program with helicopter support that would be the first phase of that, to really narrow the area down from the sort of the current 1,500 square kilometres we have under tenure down to something more manageable. But the key for that is to finalise the heritage protection agreements and get clearance to get out in the field.
Mm. And can you give a little colour on your funding and funding needs and where you are with funding?
Yeah, so we've currently got about $2.5 million cash in the
Yeah.
bank. That's as of the end of June. We're obviously actively drilling, so that is being drawn down. We do own about $3.5 million of shares, predominantly in Caravel Minerals. That's, as I said, a very similar copper project to the one that we have. So we've got about $3.5 million worth of Caravel shares, and then we also have some shares in Canterbury, which was part of the original investment we made when we came into the project. So we do have liquid assets there that we could convert into cash to support the ongoing drilling. And then at some point in the next 6 months or so, we are going to crystallise that 70% interest in the project, and that's the final stage of the earning. Once we get to that point, then it becomes a contributing joint venture. So we fund 70% of the future costs, and Canterbury funds 30%. And if either party can't meet their commitment, on agreed budgets and timeframes, then they obviously dilute along industry standard provisions. So, we're funded for the next 3 or 4 months of drilling, maybe longer if we sell our interest in Caravel. And bearing in mind, Caravel will be releasing their definitive feasibility study quite shortly, so there may well be a liquidity event there that we can convert those shares into cold cash that then funds continuation of the drilling program. But like every junior, we're always potentially looking to raise more funds, and I would argue it's a junior mining company's job to raise money and then spend it to create value, not to raise money and sit on it and have a healthy balance sheet. I think if you're doing your job for your shareholders, you should always be stressing your balance sheet and trying to deliver a massive upside through well-focused expenditure on a project that's going to deliver.
Good. I think we've pretty much run up on time there, Frazer. So looks like some good catalysts coming through in the next several months, and I'm looking forward to hearing the positive news flow that should come out of Alma going forward. So thank you very much for the webinar. And if you have any final comments, feel free, and then we can sign off.
Yeah, look, thanks very much. Thanks for the opportunity. Thanks to the people that did take the time and effort to log on. We're always available to have one-on-one discussions with people who've got any questions on on the work programs. We're always happy to talk about share price, etc., etc. As I said, we think we've got a really exciting project here. We think it's going to be very much part of the future of mining for copper in Australia. What we've got to do over the next 12 months or so is take away any residual geological and metallurgical risk, of which there's very little, but let's take that off the table, and then be able to demonstrate against peer groups that we've got a project that is going to ultimately make very good money, and I think you'll then see that ultimately reflected in the share price.
Great. Thank you very much, Frazer. And with that, we'll finish. So thanks everyone for joining, and have a good rest of your day. Thank you.
Thank you.